emergency video, everybody. We are covering Celsius. I just made a video 2 days ago telling you guys this is potentially the turnaround story of 25. They just released earnings, some great news, so it is an emergency video. My name is Chill Deal Trades. I've been trading for the last 12 years, and I make videos to help you understand a little bit what's going on in the market and to make some good decisions. Let's hop into things because I know today's video will be very long. Celsius. I believe this is a gem hiding under operational disasters because it is the energy drink of the future. Outline. Why is a healthy company besides the last quarter that's growing in profitability continuing to be hated? Why we're going to cover why Celsius is a long-term winner. Maybe a little vulnerability in the business. Review earnings, and let's look at the charts to see what's going on. Before we go anywhere, portfolio update, guys. We now have blessed Celsius now up 25% after hours. So we only have 2 stocks in the negative, and we are blowing out this year. I think holistically we're up like 25% in the first month and a half of the year. Killer year. If I start a Patreon where you can see my live portfolio and investments, would you join? It's going to obviously cost, but would you join? Let me know in the comments. And if not already, follow for live updates. As I mentioned, I made a video 2 or 3 days ago telling you guys you need to keep your eyes on Celsius. It's beaten down. It's battered. They have a lot of good momentum. Keep your eye on it. I hope you did. Jumping into why they're hated. There's really 2 main reasons. One reason is the stock should have never been trading where it was historically. I mean, this stock, let's look at the chart real quick. This stock was at $100 a share, and it got murdered all the way down to $22. This stock should have never been this high. It just wasn't at that growth level yet. I think they did promise some things. There's a lot of excitement in the category. Same thing with Monster brands, but it should have never been trading there. You should never invested there. It should never been trading there. Second thing is these guys had probably like one of the most disastrous Q3s I've ever seen. I mean, revenue dropping 30% for a growth company that typically has been growing historically at plus 50%. Growth rate just got destroyed. And I want to highlight it was because of operational issues, supply chain management with PepsiCo. They brought on PepsiCo to be a supplier to help with their supply chains, and then they just run into a mess right out the gate, and it caused some really big issues. As we see here, let's look at these notes. Revenue down 31%. Gross margin fell. They had too much inventory. They had to discount, get things through. Increase sales and marketing, right? Trying to get those products out. And worse above worse, like their EBITDA down 96%. That's just terrible. But that was one quarter, and so it got destroyed in the second half of last year. Again, let's look at the charts. This was in May of 24, May of 24, they're at $100. That was like 8 months ago, guys. But it may be turnaround time. Now let's go into why this company is a winner. First thing, brand. I'm telling you right now, the language and I would say the category of energy drinks is going to have to change just with the high caffeine levels becoming an issue. There's a lot of debate around like how healthy they actually are. And Celsius is not positioned that way. Look at this is straight from their site. Live fit, community, health. Okay, guys, this is technically an energy drink, but they're positioning themselves as a brand for those who stay active, those who are going to the gym, those who want to feel healthier, be healthier. And even look at their blend that they're putting on their site. Look at this. Green tea leaf, ginger root. These are things that typically are associated with health drinks. Guys, Celsius is maybe considered an energy drink, but they are not positioning that way. They are the energy drink of the future with how they're positioning. And last but not least, there's zero sugar. Zero sugar energy drinks, I believe, is the future for one reason. Look at what has happened in the consumer, I would just call it sugary caffeine drink category. Let's go back to sodas. Started with Pepsi. We're using Pepsi because they are a Pepsi connection brand. Pepsi. Then it went to Diet Pepsi. And now more recently we're seeing these like flavored waters, right? Sparkling waters, which is basically like soda, but without the sugar, without maybe as many calories. And we're seeing the same thing in energy drinks. Energy drinks are moving a different direction. in Celsius's, they said, I think sugar-free drinks is now 50% of the category, and Celsius is the owner of this category. This is what they're known for. They are, as they said on their site, right, lifestyle of fitness, health, and blends of things that are supposed to be healthy for you. No sugar. They are going on this momentum, and they are, in my opinion, the leader in this category. Next one, a winner because women. I want to highlight a couple things here. If we look at kind of like the energy drink category, men are 66% of the category, women are 33%. Yet, when we look at consumers, women are directly impact 85% of consumer spending. I've worked in e-commerce and marketing for a long time. I've seen this shift take place over the last 10 to 15 years. And so I think Celsius is positioned in a great way where they are going after a category that is significantly growing in the spending category. So they're hitting the diet side of things, right, which is more of just like an overarching trend. They're hitting women. This is like really the only brand that is a little bit more positioned women. Look at I went to their site. This is their about page. There's a woman working out. Okay, they are hitting a category that is underserved, and there is huge demand here. And that kind of goes into this thing. Acquisition news today. They have joined the Alani Nu brand. Okay, this is huge because there is a lot of overlap, but in a good way, within the people and the positioning of their brands. This is an excerpt from the earnings call. We believe Celsius can unlock key growth opportunities and an exciting partnership. And let's look at kind of a little bit about the brand. Functional beverages and wellness products. Guys, same exact brand, just expanding to new categories. Gen Z and millennials, like I said, how sodas have changed over time. We're seeing things in that space. The same thing is happening in the energy drink space. Women consumers, demographics. Guys, this is so huge because this brand is already producing about $500 million in revenue each year. So together they are now a $2 billion plus brand, maybe closer to $2.5 to $3 billion next year. That is 2 times the market cap of this business. This is a huge acquisition and will put them even more as a leader in the overall category. Now some vulnerabilities, right? Like we just covered, their earnings was not great in these last quarters. If we look at 90% growth, 100% growth, 95, 30, 20, negative 30, Celsius has to prove to us that they are ready to turn the business around, and they have not proven that yet. Q4, we'll go through in a second, was also not that great, honestly. And so we have to see something turn around. We need to see growth reaccelerate for us to know that this brand should be significantly higher in the future. Their valuation, I still believe, is under what they should be at today. As soon as they fix some of these operational issues on the back end, the new acquisition will, I think, just boost their market cap generally. But they have to solve this growth issue. I think this brand, honestly, should be at least 30 to 40% a quarter or yearly, if not more. And so we want to see them reestablish that. Let's go through earnings at a glance. Okay, let's just overview. Celsius, 30% of the category. Number 3, energy drink, guys. Number 3. This is huge for a brand like Monster. That's number 2. That's been around forever. Couple other things. Gross margin, we got above 50%. This is huge in this category. We need really high margins because there's a lot of discounting that's going on constantly. You have mass distribution, and you never know what those stores are going to do. So you need a high margin in this kind of category to be successful. Net income, we'll just call greens for now, and margin after everything on the EBITDA, 20%. Still pretty decent. We think of food and beverage, 10, 15%. Some brands, depending on the category, it's like 8%. This is really great to see. And best thing ever, number 1 growth brand in RDT energy. This is huge. Big growth there. Next thing, fourth quarter. There's some like not so happy faces here, right? So the first thing is like, Q4 revenue, down 4% year over year. That's not great, right? I do believe they're still on their recovery after the logistics and supply chain issues. I do believe that will get worked out. And we are seeing that because of the improvement here, down 30% in Q3, down 4%. So we're seeing some positive momentum. And year over year, only 3%. That's not great, right? Like, we need a lot more great year over year for the full year. We need to see that accelerate next year. That's just the reality. And I think, like, again, when they get to these supply chain issues, that will work itself out. One thing I really am excited about is international. They launched international, I think, this last year, 39% quarter over quarter, 37% year over year. This is huge. For these guys to be successful, they have to be a large international brand. If they want to get to that, 10, 15, 20, $30 million a year, they're going to have to expand international. That's just the reality for this business. Gross margins, I mentioned already, but from 47.5-ish to 50%, full year 48 to 50. This is good. This means maybe less discounting. This means they're getting their inventory issues back in order. This is just a positive trend in the business. Next thing I want to mention, I just said it in a second, Celsius, number 3 brand. And guess who's number 4, guys? The brand that maybe they just acquired. So the 3rd and 4th brand are now together. This is huge, guys. This is so big for category dominance. We know that there are conglomerates out there, right? Like this slide earlier. Monster is a conglomerate. They are huge. And so just part of the strategy for Celsius is going to have to be partnering with the right companies or having acquisitions with the right companies or mergers. That is just going to be so essential. Honestly, this is a brand that Pepsi will probably buy eventually as well, but that might be more in the future. Continued zero sugar innovation. Like I mentioned, these guys are not an energy drink company. They are health, wellness, and we see that in their product line adoption. Expanding into hydration category, new flavors, expanding distribution, introducing multi-pack variations, having little energy sticks or hydration sticks. Like, this is the right movements for this company. They have to expand their category. To my point earlier, if they want to be a $50 billion a year business in revenue, if they want to hit 25 million, whatever that number is, they are going to have to significantly move higher, or they're going to have to significantly add more categories to their product line. And hitting it again, this is so huge. There's just some numbers specifically on this company. Last year, almost 600 million in revenue, 50% CAGR. That's amazing. And so just them blending their brands, like, this is a fun, playful brand. They're much more in the women category, which I think is a huge combination with Celsius. But this is just a huge win. And again, they are now 16% of the category, fastest growing portfolio at scale, 2 billion sales platform. And if they do it well, again, I said, like, they can reaccelerate growth next year, which will be huge for their stock price, and it will go higher. Couple reviews before we get to the technicals. Energy drink category shifting, guys, is just the reality, and those who shift with it will be successful, and Celsius is in that place. People are becoming more conscious to levels of caffeine, to what's in their drinks, and Celsius is positioned that way. We've seen Red Bull, market share continue to decline. I believe Monster is next unless they do more of the right acquisitions, and that primes Celsius and now their new acquisition as the future of energy drinks. Let's get to the technicals. Technicals are honestly kind of bummer.com. There's honestly not a lot to see here just because the sell-off has been so violent, right? Like, when a stock just goes to the ground, basically, like, what do you analyze, right? Like, okay, we have a little bit of a downtrend here. We just broke above that, right? Like, we just broke above that after hours. We're at about $32. Oh, $34 now. Look at that, guys. $34 now. So we broke out of this downward kind of channel. That's a positive. We were extremely oversold on the weekly, which gives us a lot of time to move higher. That's what we want to see. Like, when a stock has been so disrespected for good reasons, but now showing an opportunity to turn around, this gives us a lot of space to move up on the larger time frame, which might signal a now bullish phase for the company. We want to keep track of this 200-day on the weekly. We're at $38. That's going to be significant resistance. If we look at the charts, we have really big resistance around 36. as well as 40. So that is going to be a really significant area that probably we're going to hit up against and got to figure out, like, is this recovery in Celsius true? You know, they're going to have to prove that in Q1 that, you know, we've actually turned things around. We are reaccelerating growth. And if so, then we will start a new bull cycle on this stock. Let's go to the daily just to zoom in a little bit more here. Like I said, down channel, broke above. I think just so we have it as a marker, let's put, we are currently at about $35 a share. So let's just say we're right here right now, to give some context to resistance and support. We broke above 32, which is huge. So 32 is kind of like this sideways range that we broke below. You know, like it was sideways from September 24th to January 25 to January. We broke below that and now we're back above it. I really want this stock to hold above 32. I think above 32 is a great sign. Even when we look historically, where's 32? 32, like, we just want to stay above this kind of zone of accumulation. Like, we've seen this time and time again, that this little range likes to get stuck in. And that range is 26 to 32. So if we can stay above 32, this is a huge sign. And we're going to start seeing kind of this recovery upwards, right? And that's what we want to look for. We do still have declining SMAs, which is not great, right? Like 200-day is declining, but let's keep a track on that number, 42. 42 is an important sign. Let's look at the 100-day. 100-day, 28. So it's back in that zone. We want to see these now start to curl up, right? Like, now that we're potentially entering a new bull cycle, let's see those circle up at 26, 26, 28. So let's see these reaccelerate up. I would love to see the 50 and 100-day kind of now start curling up and find its way to $32. If we can find really great support on the SMAs at $32, that could potentially put a base in for the stock. Stock keeps moving higher. Now we're almost at $36. 39%, guys. I'm telling you, watch the videos. Whenever I put out a video, I'm very thoughtful in why I put it out. I just don't put junk out. I'm putting out things that I have a lot of conviction in, that I believe in. And so watch my shorts, watch my long form videos. They are for you. They're for both of us to be successful. But I think that's a good recovery. We'll keep track of how Celsius continues to move. This is already a buy in the portfolio. It is now up 40% in the portfolio. And so this is a long-term buy. We believe this is a long-term winner. Look for these support, look for the resistance. Thanks for supporting the channel, and until next time.